Back into the business of earnings season, a lot more Kenyan banks are now reporting double-digit rises in net earnings for the first half of 2021, especially as the East African economy gradually starts to recover from the economic damage inflicted by the pandemic. NCBA is the latest among these. It reported a 77% rise in net earnings to around $42 million. Interest and non-interest income went up by just over 6 and 12% respectively to $186 million and $86 million respectively. Now, the bank is increasingly reliant, though, on interest income coming in from its portfolio of government securities. 42.6% of that interest income came from that particular asset class, as private sector demand for credit does remain weak. The bank's portfolio of loans from the private sector, in fact, did fall by 4.6%, at least on a net basis, even as the portfolio of government debt rose by just under 12%. Now, gross non-performing loans went up by nearly 20% over the period to close at about $380 million. At those levels, it's roughly 19% of net loans and advances. It's in contrast, however, to the broad sector trend over the first 6 months of 2021. Non-performing loans in general declined by 1.7%. A few hours ago, I spoke to John Gachora. He's the Managing Director of NCBA. We explored his thoughts on expanding digital lending services into Ethiopia in partnership with Safaricom. But first, we explored those trends in non-performing loans within the bank's portfolio.
Well, last year and actually earlier this year, banks took pretty heavy provisions. Provisions usually a leading indicator of NPLs. Because you take provisions, if you think a loan is going to go bad, after a while that crystallizes. So what you see this quarter is for a lot of banks, provisions are down, but NPLs are up because whatever they thought was the risk last year is crystallizing, or they thought was the risk last quarter is crystallizing. Going forward, the fact that banks are taking lower and lower provisions says that going forward, the expectation is that NPLs then would go down as well. That's what I expect to see going forward.
Okay, looking at your numbers, because I'm seeing that your loans to consumers, your net loan number rather, essentially declined a little bit between June last year and June this year, down about 10 billion shillings, around 215 or so billion. But your holdings of government securities, at least the ones that are being held to maturity, that went up by a significant margin. But should shareholders expect that pattern to continue, at least in the interim, because the strength of that recovery, yes, it's optimistic, but demand for consumer credit may not necessarily be strong over the next 12 to 18 months?
Yeah, so I think what you see from our numbers, actually, from a net loans perspective, it may even be net down slightly. Yeah? I think a gross number we have slightly. The reality is that for 2020 and now the first half of 2021, yes, the demand for credit has not been strong at all. However, going forward, as I said, what I'm seeing, or what we're seeing, is a lot of plans, a lot of capex applications coming through, and that gives me the optimism that we'll see a bit of uptick of credit. However, that said, obviously a lot of this depends on the vaccinations and how that goes, the lifting of some of the restrictions that are still in place, and not just in Kenya, that's across the board, because supply chains still remain disrupted.
One of the other lines that stood out, $272 billion issued in digital-only loans, up 16% year on year. Walk us through the status of that portfolio. How did it perform in 2020 and into the first 6 months of this year?
So in 2020, Rama, as you may have seen last year, we had a fairly tough year from our Mshwari portfolio. I think we announced that, and we did announce that our default rates had gone up significantly. I think I didn't mention a number of about 8% last year. We have seen that come down dramatically this year. So this year, it's great performance, a great contribution for us. And some of the growth that you have always seen, a lot of it has also been on the Fuliza side. And on the Fuliza side, defaults continue to be very, very low. So performance has been all around good for our digital business.
What sort of default numbers are we looking at for Mshwari and for Fuliza, at least in the first 6 months of 2021?
Well, I wouldn't disclose that publicly, but I would say significantly much better than the 8% I mentioned last year for Mshwari, Fliza has always been sub 1%. I mean, that has performed well.
Safaricom, of course, who you partner with on the Mshwari product, they got access to the Ethiopian market not too long ago. I know you don't have an operating license in Ethiopia, and that particular part of that market is essentially shut off. But is that something you're looking forward to taking into that market?
The answer is yes. We are always evaluating opportunities, Ethiopia being a great opportunity that we see for digital credit. Therefore, it's certainly in our radar as to when and how we'll enter into it. We are not there yet, but we are looking. We're examining a number of options.
Ethiopia is an interesting market, though, because the currency risk, the FX risk is enormous. Assuming you do get into that market, how would you manage it?
How would we manage it?
The FX risk, because the birr, for example, was down at least 40% against the American dollar last year, and it's trading at around 25%. Well, there's a 25% premium on the parallel market. So the FX risk in that market, at least in the short term, looks fairly significant. So how would you manage that if you went into Ethiopia?
Well, I think when I say we're examining the possibility of going into Ethiopia, just as we are a number of other markets, one of the things obviously we have to consider is exactly those risks, like the FX risk. So we're obviously doing quite a bit of work to see how we manage that. Again, I'm not at liberty to say that we have concluded on strategies how to tackle that particular problem. What we are clear about is the size of the opportunity. That it's huge size of opportunity, and as you observe, some of our partners are already on the ground, and that creates a great opportunity for NCBA.